Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. We're sitting at $2.53, trading with the range of 232 to 253. We're up about 2%. We got some really good volume coming in. Really not sure where the market's going to go right now, so I won't even predict it. Keep an eye on it and see where it goes from here. We're going to start off with the positive side of things because the last 36, 48 hours has been pretty negative in my opinion. We'll go ahead and start with this, and then we'll get into what really happened in the last 48 hours. Brandt's new charts expose the next move. XRP and XLM just flashed breakout signals. His new weekend charts for BTC, ETH, XRP, and XLM just dropped, and his take on XRP and XLM might shock you. The quiet ones are loading up while no one is watching. Let's unpack it. A final post for the weekend, then I will leave you youngsters with your dreams. XRP, just a minor reaction and a bigger theme of things. Bitcoin, bull still alive and well. And XLM, a bull waking from a nap. ETH is ready to rock and roll. If I change my mind, I won't let you know. XRP, just a minor reaction. Peter Brandt sees what most traders miss. XRP is forming an ascending triangle, a textbook bullish continuation. His words, just a minor reaction and the bigger theme of things. Translation, this dip isn't doom, it's a setup for a breakout. Bitcoin, bull still alive and well. No reversal, no breakdown, just clean structure. Brandt's chart shows BTC holding higher lows, still leading this cycle. The bull's heartbeat, steady and strong. XLM, a bull waking from a nap. He literally said it. An inverse head and shoulders pattern forming, a classic reversal. Stellar's been sleeping through the noise, but now it's stretching awake. Early rotation vibes are here. Ethereum, ready to rock and roll. ETH is coiling just under resistance, the kind of setup that breaks hard. Brandt calls it ready to rock and roll. A breakout here could reignite the altcoin wave and drag XRP and XLM into the spotlight. The big picture, cycle in motion. Brandt sums it up in one perfect line. BTC leads, ETH coils, and XRP are quietly positioning for rotation. This isn't euphoria, it's structure, discipline, and timing. The real rotation phase may be closer than anyone thinks. His final words, Peter Brandt ends with his signature dry humor. If I change my mind, I won't tell you. Markets move fast, narratives flip, but one thing's clear. The crypto bull is very much alive. If you found this information valuable, helpful, please like, share, subscribe, and comment down below. All right, now let's dig into what happened. What happened in the last 36 hours was engineered, an artificial dump that punished traders, not holders. And you have to understand that, keep that in mind. It punished traders, not holders. If you're just buying and holding, this did not affect you. Most couldn't even catch the dip because exchanges froze right when it mattered most. They're manipulating it because they still can. Once regulation takes hold and institutional capital enters, this kind of market control will vanish. They know real money isn't here yet. They know the time is running out. Every turning point in history starts with a moment that feels unfair. You must think of it that way. The dot-com collapse built the internet age. The housing crash created a decade of new wealth. And now, the chaos in crypto is setting the stage for a global financial reset. This is not the end, it's the separation between those who react and those who understand. Lock in, my friends. Binance has proven once again why they're the biggest scammers in crypto. During the recent market crash, they froze user accounts across the board, prevented traders from accessing their funds at critical moments, limit orders and stop-loss functions were conveniently disabled, a move that ensured Binance maximized profits during the largest liquidation event in history. By blocking users from managing their positions or longing the bottom, Binance effectively turned a market meltdown into their own profit machine. The new CEO of Binance, Richard Teng, could likely face prison for this market manipulation. And I believe someone needs to be going to prison for this. This is another wake-up call why you can't trust Binance or other exchanges. Decentralized exchanges on XRPL are coming in fast. They know it. They want to try to stop it, but they can't. This would have never happened the way it did, and many could have cashed out if they wanted to. Instead, they were locked out. Even those who wanted to buy in failed. And I was one of those persons trying to buy in. And this wasn't on Binance or any of those other exchanges. This was on Bitwise. It happened across the board, in my opinion. Yes, it's official, my friends. Crypto just saw its largest liquidation event in history with 1.6 million traders liquidated. Over 19 billion worth of leveraged crypto positions were liquidated in a 24-hour period, 9 times the previous record. Why did this happen? Let's explain. Let's put it into perspective. The liquidation event we saw over the last 24 to 36 hours was 17 billion larger than the February 2025 crash. It was more than 19 times larger than the March 2020 crash and collapse of FTX. Never in history have we seen anything even close to this. Amid the liquidation, Bitcoin recorded a $20,000 daily candlestick. This marks a 380 billion swing in Bitcoin's market cap alone in a single day. That's more than the market cap of all 25 public companies in the world. Once again, this has never happened in history. But why did this happen? To better understand, take a look at the timeline. At 9 a.m., crypto began selling off before the 10:50 a.m. Trump tariff post. At 4:30 p.m., a large whale took shorts in crypto. At 4:50 p.m., Trump announced a 100% tariff on China. What happened after that? We all know a 19 billion liquidation. The first question becomes, how did this large whale time the drop so perfectly? By 5:20 p.m. Eastern, 30 minutes after Trump's tariff announcement, liquidations hit 19.5 billion. The shorts were closed promptly after the drop for 192 million profit. But there's more. The main culprit of this appears to be a combination of excessive leverage and risk. If you take a look at the breakdown of liquidations, it was heavily skewed towards longs. 16.7 billion in longs were liquidated compared to 2.5 billion in shorts. That's a 6-to-7-1 ratio. Even more evidence of excessive long leverage in the market. All the major exchanges, except for Bitfinex, saw an overwhelming percentage of long liquidations. Most were 90% long, including a massive 10.3 billion on Hyperliquid alone. The same exchange the whale used. Next component was the shock effect. Markets became excessively crowded to long direction after a historic run from the April 2025 low. Greed exceeded 60 as shown below days before the crash. The sudden shock of the tariff post led to a massive shift in sentiment. I believe they just used this shit as an excuse. Liquidity was the next issue. Trump's announcement came 50 minutes after U.S. markets closed Friday. As seen many times, Friday night and Sunday night often come with large crypto moves. Why? Liquidity is thin. The sudden rush of volume after the post led to a domino effect. So what's next? We believe this crash was due to a combination of multiple sudden technical factors. It does not have long-term fundamental implications. A technical correction was overdue. We think a trade deal will be reached and crypto remains strong. We are bullish. This week's rebound in volatility means opportunity for investors. The macro economy is shifting and stocks, commodities, bonds, and cryptos are investable. Yesterday's drop was a reminder of how fragile yet profitable markets have become. Between 9:30 a.m. and 5:20 p.m., crypto erased 800 billion of market cap. Remain objective and capitalize on volatility, my friends. Do not let your emotions get in the way. And I agree with John Deaton 100%. If this is true, it needs to be investigated. They need to be put in jail. Could you imagine this happening to you or one of your friends? Imagine having a friend that was close to 30 million net worth. He had almost a decade in crypto. He lost the whole 30 million yesterday and 10 million on a cross margin. An entire decade and multiple generations. He could have retired all gone in 10 minutes. Anytime I ever used cross margin, I always got wrecked. I stopped using cross margin. I only use isolated now, and this is not financial advice. Imagine this, over 1,000 wallets on Hyperliquid wiped out in the market crash. 6,300 plus wallets with losses exceeding 1.23 billion. 205 wallets lost over 1 million, and 1,070 wallets plus lost over 100K. Those are pretty damn wild numbers, man. A lot of people lost a lot of money in the last couple days. I feel really bad for what happened. Yep, 90% of those traders on Hyperliquid are now sitting in losses. Think about that. 90% of the traders on Hyperliquid are now sitting in losses. And last up, we'll end this on a positive note. Another batch of S1 amendments rolling in spot XRP ETFs. Bitwise, Franklin Templeton, 21 shares, WisdomTree, Grayscale, and Canary. Several included new tickers. Getting close, my friends. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.